Alrighty then. Happy Monday, everybody. Hope everybody is doing well, enjoying the weather wherever you are, having a good start to the week. It's been another interesting week in real estate land. And, it's one thing, the real estate land never is the shortage of content to discuss. So, and this week is no exception. So we're going to talk about some different things this week. Got a couple different things up my sleeve here this week. And we're going to kick it off with talking about the Fed and what the Fed's inflation fight, what they're doing, what they're not doing, and how that's impacting interest rates, which is just messing up the market. And the interest rates being so high, the lack of Fed intervention and bringing that rate down, which is causing the mortgage rates to keep going up. And that is just, it's a whole big mess. It's a whole big mess. We're going to talk about that. I have some questions that were posted on my channel over this past week that I thought I'd bring on and answer live. A couple questions that came over that I thought they were really great, and I thought it'd be good to have a conversation. So feel free to drop your questions in the chat if you are logging on. And actually, I'm going to see if we can get this banner up and running here. And let's see if we can get this going. There we go. Get my act together. So, but as always, it's always more fun when you're having conversations with friends. And as I do every week, someone on that is fun to have on, brings a different perspective, have a conversation, and you guys can interact with that person as well. Log in on the chat. So this person is my friend, your friend. And, they're coming in out of the green room. They are coming in from Jersey Shore, weighing in at none of your business. My friend, your friend, none other than Jackie Baker. Let's go, Jackie.
Woo! Hey, Jen.
Did you like my?
That was awesome. That was so awesome. Thank you. Thank you so much. I love it. I'm so proud of you. That was a good one. That was good. Thank you. Love it.
How you doing down the Jersey Shore?
I'm doing well. Not the Jersey Shore.
I know. It's like
I always think the Jersey Shore, but
yeah, I don't. Yeah, I was the well. You're like I always think Sopranos. And Jersey, and
I'm North Jersey. So I'm not far from where the Sopranos were. Let's put it that way. But I'd rather be at the Jersey Shore right now, sitting on the beach having a cocktail. But anyway, so yeah. So thanks for having me. I'm so happy, so honored to be here. I appreciate it.
Oh, of course. You know what? You have, we always have good conversations. You always bring an awesome perspective, and you get some years under your belt in the real estate biz. So, and you know what's going on in the industry. So it looks like we got some. Some folks joining us already. We've got, of course, our friend
David.
David Matney. Good to see you, David. Always. Let's see. Oh, we've got a new guest here. Welcome, Heidi Murphy. This is by design. The Feds need to be abolished. The Fed needs to be abolished. Well, that is a loaded statement, and I'm not going to disagree.
Right.
If not abolished, they need some work over there. Because I think I sometimes think my 17-year-old would make better choices than all the old fogies over in the Fed there.
Same.
So.
Yeah. Like I was speaking to a friend earlier, and she said, we just need to have some adults in the room at the government level.
You know what?
They just don't. Oh my God. They don't
okay. So the kids need to go to bed. Let the big kids at the table take care of things.
Exactly.
Because sometimes common sense is not so common.
No, it's not.
Well, let's dive in here.
Yes.
Shall we?
Yes.
Let's dive in. So we've got, let me just get myself organized here. Hot mess.
You're fine. You're fine.
Oh, it's all good in the hood. It's all good in the hood. So we've got, this is the article I came across last week. Was it the 18th, which was Thursday?
Mhm.
The Fed inflation fight isn't over. That's bad news for housing market affordability. And of course, we've been kind of waiting, right, for the Fed to do something with the rates, because if the Fed is proactive on the rate, it doesn't directly impact the mortgage market, but it indirectly it indirectly affects what the mortgage market does. And
Mhm.
typically, when the Fed lowers their rate, the mortgage market lowers their rate,
Yep.
and they keep easing, like we're supposed to be first quarter, then maybe June, and now August, and now there's reports coming out that may not happen at all.
I know.
So, but it was this article was interesting in that it says this week, Fed Chair Jerome Powell suggested that the central bank's inflation fight could take longer than previously expected. Huh. Super
Mhm.
surprised.
Mhm.
Newsflash. I need one of those buttons, right? Tee,
Yes.
tee, 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 big
You do.
newsflash, newsflash. Because and
Yeah,
and
and
um,
yeah.
it says more recent data shows solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. They're always trying to get to that 2% inflation goal to kind of keep things a little balanced. Um, the recent data have clearly not given us greater confidence, and instead indicate that it's likely to take longer than expected to achieve that confidence. Powell pointed out that progress made on the disinflation front, meaning a decelerated rate of consumer price growth in the second half of 2023, hasn't carried over into early 2024. So they're like expecting things to settle down, and they just haven't. And they go on to say that on Tuesday, the average 30-year fixed mortgage rate, as tracked by the Mortgage News Daily, hit 7.5%, highest mortgage rate reading that's the highest mortgage rate reading in 2024, and the highest level since November 13th, 2023. Doesn't that November 13th, doesn't it seem like years ago?
It does.
And it's like what, like 5 months ago? It's
I know.
not even.
Isn't that weird?
Yeah.
That's so bizarre.
Very strange.
Yes.
It goes on to show, and I want to talk about this. Okay. So this is how this all comes together, and what does this actually mean to the normal everyday, person,
Mm,
the everyday buyer, consumer, and it's all about affordability, right? Like it's,
yep.
you know, a combination of home values and interest rates on how much does it actually cost to make that mortgage payment. And what's interesting, as much as it is painful right now, and as much as the media is talking about how bad the affordability rate is right now, right?
Mhm.
Historically bad. Um, this is coming right from the Dallas Fed. This is where we are here, right? And let's see, where does it, in terms of points, for those that want to know, it's 84.86. I don't track it that closely to know what that number, like how to gauge that number. There's a formula that
Mhm.
goes into it. But my point is 1981, 57.2.
Mhm.
Now, I have another article that I want to get into that kind of gets into that a little bit more,
Right.
because a lot of people say, "Oh, the houses were way less expensive and all the things." But it's all the relativity of everything combined. It's the relativity of how much the eggs cost versus how much the mortgage payment cost, and
Mhm.
how much the gas costs compared to home, all those things combined, and that relationship is what gives you that affordability index.
Right.
And we're not as bad as it was in 1981.
Mhm.
So but it's on its way.
It
It's
is.
it's on its way. But what do you think, Jackie?
So look, it's some of this information that the government's throwing out there. They're saying that the job market's great. That's another reason why. It's like one of my lenders tells me, he's like, we need like, he goes, we need unemployment to go up in order for these rates to come back down. He said, he goes, it's a sad thing to say, but they keep saying the job market's great. I don't think the job market's that great. I think they're overinflating these numbers. Like that's call me whatever.
Yep.
Like,
Yep.
where
Yep.
I'm going with this. A little bit of conspiracy theory here, but
as our friend would say, Christina, put your tinfoil hat on and say
Tinfoil
this is
hat on.
yep,
You
yep.
know
But
what?
it may not be. I mean, it is like we have to take everything into consideration, right? Because it's
You
like,
do.
the media is always going to paint a picture on what they want to
What they
report,
want to be
and
exactly.
and what will sell. Well, I'm
What
not going to say sell
what's
newspapers
it's the
anymore.
click it's all about the clicks
It's
and the
all about the
views, right?
clicks, right?
And that's what they want. And saying that even the government's saying, "Oh, job reports are great. The job market's great." I'm like, no, no, it's not. My husband was unemployed for 8 months, and during those 8 months, he was executive level, trying to get a CFO job. He'd go on LinkedIn, their job posted, and he'd apply, and there'd be like 200 to 300 applicants within like hours. I mean,
Wow.
that tells you right there how many people are out of work. So it's
Well,
like, don't tell me, the job market's great. That's why, like, when you see these charts and everything, like, oh yeah, they're saying it's like, oh, it's getting back down here to where we were at 1981, but maybe we're already there. You know what I'm
yeah,
saying? They're trying to make it like, oh, we're okay. It's we're
I
still
don't
okay.
disagree with you. I don't disagree with you because of the fact that the numbers that reported, I've read reports that say that those numbers are not, and again, not to be conspiracy theory and all the things, but
Right,
those numbers aren't the numbers in the sense that they're not, yes, it's this number plus this number and formula and algorithms,
right,
but they can tweak those however they want
absolutely.
within our government as well. And they
Mhm.
don't have to report. And sometimes they purposely not file that weekly report that's supposed to be on one of the executives' desks so they can determine these numbers by X date. And it's like they purposefully withhold that information to make the numbers look better,
Mhm.
and it's
Mhm.
just, which is frustrating. I mean, I know that, I mean, for example, I heard somewhere, I don't know if you've heard this before, but that they, in terms of calculating that jobs number, you know, they in terms of how they, calculate it with, in relationship to unemployment, and unemployment doesn't negatively impact the job market because they're technically still in the process or looking for, like, they're not fully unemployed. Or how about the people that are, more importantly, the people that are unemployed that aren't looking for a job?
Yeah,
That's actually what I meant to say. My
right,
brain's
right.
my
Okay, yeah, that's what I
my
thought.
my ADHD brain is like, "Oh." Um,
I got you. I got you. We
but
talked enough.
but
I
you know what I'm
understand
saying?
how
Like,
you go. Yeah.
it's like if I decided not to work today, if I'm like, "You know what?
You just dropped out of the whole workforce completely. Right.
I'm just gonna
Exactly.
go and be like, I'm just gonna go, like, travel for a living, or I'm gonna go and, like, be a bum and sit on an island somewhere and not work." I'm
Yep.
not considered unemployed. So I'm
Mhm.
not part of that unemployment number, but I'm not working either, which means I'm not spending money in the economy because I have no money coming in.
Right.
So
Exactly.
how does that work? You know what I'm
Yeah,
saying?
I know. I know. It's listen, I'm skeptical. I'm skeptical about everything. I don't like trust everything blindly or like, anything that I see. It's like, okay. Like I don't say, well, this one says this is what it is and is right. Like I mean, anything that I read, take everything with a grain of salt. I'm not gonna, not gonna believe everything that's out there because we're living this right now, Jen. I mean,
I know.
we're working in this real estate industry right now, and I will tell you, this is absolutely my worst year ever in real estate, ever. And you
You
know
know
what?
what? Same,
You're right.
same.
We're
28
all
years. I've been
yeah.
doing this since 1996,
Yep.
and I have, I mean, aside from, I mean, even during the recession of
Mhm.
'06, '07, '08, which was horrendous,
Mhm.
it would the business changed,
Yep.
but there's still things that need to happen. You went from people buying in speculation and for, people buying flips and investors to short sales and
Mhm.
foreclosures. But
Mhm.
there were still things happening.
Yeah.
And I have not, like, but my book of business, I have not seen this. Like, and
Yeah.
I have a lot of clients that are just sitting there and they're sitting on their hands.
Yep.
Like, we wanna move, we wanna do the thing, but we just can't
Can't do it.
with the way things are now with the rates, we can't afford it.
Right.
We can't afford to move,
Exactly.
And I haven't seen it like this. So,
No, it's bad. It's really bad. And what kills me too is talking about like the media and you know the stuff that's online, even on the YouTube, where
The
people
YouTube,
where I know I love saying that too.
the tube.
The tube.
If you say the Instagram, I think
I
we're
will
out.
not say the
We're
Instagram.
done.
I will not say that.
Please don't do it. Don't
But
do it.
we have our infamous, the crash bros, right? The guys who are
Mhm.
talking about the market's crashing, and I had a friend yesterday. I wanted to scream. She texted me a link to a video to one of those crash bros people, and I won't say his name, but you know who I'm talking about. And she's like, "Oh, this guy sounds like it was a video about like, oh, Zillow predicts 30% price decreases in whatever state." And her comment was, "Oh, this guy seems pretty. He's got some good information." I wrote her back. I go, "That guy's a freaking moron." Do not
Well,
listen.
they're doing. I mean, you can manipulate the numbers any way you want.
Exactly.
And so
But
it truly, like those crash bro guys, the guys that are doing all those, videos that are manipulating those numbers. I mean, there's probably some truth to some of that for sure. I mean, hey, you and I are not like, I had a couple people comment on my channel this week, like, that, oh, this is way it's going to be, the market's going to drop and whatever. And it's like, you know what? I start to thinking, I'm like, everybody's got an opinion. And it just because it's different than mine doesn't mean it's that they're wrong.
Right.
Doesn't mean I'm right. Like there's your opinion,
Right.
my opinion, and then the truth is somewhere in the middle.
Right.
I think it's dangerous when people start thinking that absolutely that's what's going to happen.
Mhm.
And because honestly, nobody knows,
No,
right? Nobody
no
knows
one
how things are
knows.
going to go or how, I mean, there's just no way. I mean, I honestly thought we would have lower interest rates by all the
I did
reports
too. We
that
were
we're reading that are put out by economists and people that are way smarter than you and I
Yep.
had all the indicators showed that the rates were going to drop.
Yep.
And that the Fed was going to step in and the rates were going to drop and we were going to be probably around 6% at the beginning of this year.
Yeah.
Never even could.
Nope.
Never wasn't expecting all of a sudden the rates to go up to 7.5%.
And here we are.
And you know what? A lot of people are, and I actually have a couple articles about this. A lot of people, was interesting is that I read a report this morning that said mortgage applications were up last week.
Seriously?
They were up. And you know why?
Why?
Because buyers think the rate's going to go higher. They think it's going to go higher. So they're going to get in, they're going to get their pre-approval now before they go up any higher. So you know what? I want to share this thing. So 1981. Okay. I want to share this actually, just for perspective, because I just thought it was interesting. Do you remember 1981?
I do. I was actually in what was I? 6th grade?
6th grade. I think I was right. I think you're like a year older than me. I was in, I think it was late elementary school.
Yeah.
I think I moved to Plymouth in 81 or 82 or something like that.
Yep.
Anyways, this article was put on by, I saw this on NerdWallet. Says this, it has been this bad before. How home buyers got it done in 1981. The article, the title grabbed me because I'm like, ooh, tell me more.
Yeah.
A solution? Is there a potential solution? So I won't go into reading all this stuff. It kind of paints the picture of what happened, in the past and all this. But this is where it gets to the meat. Is how this article, when was this article written? So this was November 2022, but it's still relevant, right?
It is,
because nothing positive has changed since November. So, but anyways, how 2022 resembles the early 80s. So the similarities between now and then started generationally. 1981, the oldest baby boomers were 35 years old, and that cohort was in full home buying mode. The first millennials were born that year, and the next generation had been diligently searching for homes in recent years. When the average interest rate on the 30-year fixed mortgage reached an all-time high of 18.63%.
Oh my God.
I repeat, 18.63%. Let that just sink in for a sec, right? In October 1981, it had risen almost 5 percentage points in 12 months. Sound familiar?
Wow.
Rates had gone up almost as fast during a spell in 1980. This year, when the 30-year mortgage reached 7.08% in early November, it had gone up 4.1%
Mm-hmm.
in 12 months. Okay? This is like Groundhog Day
Mm-hmm.
or reoccurring nightmare, however you want to frame it. And so it says, the rapid climb in mortgage interest rates would be home buyers. This is forced would-be home buyers to skedaddle. I love that word.
Yeah.
It's just a fun word to say,
It's a
skedaddle.
fun word.
Skedaddle.
Never seen that in an article.
No, I know.
Cool.
You're right.
Yeah,
I gotta
right?
use that. I gotta use that more often. Skedaddle out of the market. Year over year, existing home sales plunged 22% in 1980, and then another 18.6 in 1981. It says this year the pace of existing homes dropped 28% in 12 months, ending in October. It says finally, rate lock-in accompanied both eras. They saw it then, we saw it now. That's when homeowners kept their properties off the market because they wanted to hang on to their low mortgage rates.
Yep.
March 1981, a real estate exec told the New York Times that home sales were being inhibited because nobody wants to lose their low interest mortgage.
Look at that.
September 22nd, 2022, chief economist Lawrence Yun said some homeowners, trade up, yada, yada. They're doing the same thing now. They're doing exactly the same thing now. So the big question that I asked on this article is like, well, what did they do? How they obviously got out of it. So
Right.
here's the thing. It says a big difference, the role of assumable loans. And I don't know if you've seen this at all, but I've had a couple people ask me about assumable loans. Assumable loans just don't, you don't see those. And this is why. It says many mortgages were assumable at the dawn of 1980s. With an assumable mortgage, the buyer not only gets ownership of the house, but takes over the seller's home too.
Right.
So if somebody, those watching, like if you have a home that has a $100,000, 2.75% interest rate, and and you can figure out a way to make up the difference of the purchase price. The seller could sign that mortgage. The buyer still has to qualify, but they have to sign that over. The thing is the mortgage program can't change. It has to be the exact, it's just one entity moves over. It goes on to say though, but Congress slammed the door on assumable loans in 1982. Now, only a subset of mortgages are readily assumable. Those insured and guaranteed by FHA and the VA, Department of Agricultural Rural Housing, and which only account for 18% of the total volume as of 2022. So this is why we don't see them. So, you know what I'm saying? Like it's not,
But why did Congress slam the door on that? Why did they stop that?
I think it was because of regulatory issues. I think that so here's the thing. I think the answer is in the next section, because you have somebody that wants to have, say you find a house for $500,000, right? And the owner has a 3% interest rate and they only owe $250,000.
Right.
The person buying it, the buyer does not have $250,000 cash to make up for it.
Yep.
Maybe they have $50,000. So they have a $200,000 gap. So what do you do about that? You can't, that loan that's assumable has to move in one big chunk.
Right.
So you have to figure out how to make that up. And what they did back in 1981 was creative financing. So, and I think this is why Congress was like, nope, not happening. It says, in most cases, creative financing took the form of loans to buyers from the sellers. For instance, in the form of promissory note for a certain amount of money, the buyer would pay the seller every month, with the buyer possibly taking out a second mortgage for the remainder of the purchase price. It just says the arrangements had names such as contract for deed or wraparound mortgage and so forth. It says more than 40 years have gone by and the 1980s style creative financing isn't coming back. Lenders frowned on the ad hoc transfers of loans this answers your question, Jackie.
Mm-hmm.
Ad hoc transfers of loans that they originally made and wanted to write new loans at current rates as properties changed hands. See, that's the thing. The banks lose money. If the banks lose
Exactly.
money, they lean on Congress. And then
Yep.
Congress says, oh,
Oh,
okay,
yeah. Okay. We won't. Yeah. We'll
it's
put
all
a
about the
kibosh
money.
on it. That's
This
why
is
they
not
leave
about
the
protecting
government
the
loans.
consumer,
Yep.
right?
Yep.
It's about
Makes sense.
putting more money in the bank's pocket.
Yep.
It says consumer advocates warned of the risk to buyers and sellers of informal and unconventional schemes, which is another thing, that could leave either party holding a worthless contract or committed to an unsupportable payment structure. I mean, somebody's, you have this little lady who says, "Oh, Miss, the buyer seems really, really trustworthy. I don't need the money right away. They can pay me $100 a month." And then the buyer, who's like a shyster, is like, "Okay, lady, nice knowing you."
Yep. They're done. Yeah.
So that was the thing, and that this article is like, this is what we need. We need new solutions to get us out of this flipping
Oh,
mess.
oh my
We
God.
need
Definitely.
we need
Definitely.
solutions, creative financing solutions to make up for the lack of,
Yep.
the existence of those things that, got us out of, got us out of the mess back in 1981.
Yes.
That's why. But have you had anybody ask you about assumable?
No, but it's funny. A colleague of mine, she's actually a very good friend of mine from my office. She's actually doing one. Her clients got a house that they're doing.
Really?
It's a VA loan. They're assuming their VA loan. It's 2% interest rate. Can you
Wow.
imagine? Can you imagine that? Yeah. So she's never done one before. She's been in the business like you, 20 something years, 25 years. And this is her first time ever doing it. And she said it's pretty cool that they're able to do this. I mean, it's a process, they have to get approved and qualified, all the
Yep.
things. But they're out there. The problem is, they're hard to come by because now it has to be VA, USDA, and I think it's FHA. FHA is
Yes.
assumable.
FHA was on there.
Yeah.
David says unemployment is low because everyone needs 2 jobs in order to buy a dozen eggs.
Yeah,
That's
it's so
a
true.
truth bomb right there.
So true.
I ordered groceries because I just don't do grocery stores, right? We've talked about this. I hate
Yep.
grocery stores and all the things. So I'm like, ooh, Walmart delivers I'm like, sign me up.
Yeah.
So I'm going through and I'm clicking through and I am spending it's just me and my daughter at the moment. And I spent like $80. I got like
$80.
I got like 3 small bags of groceries. That was it. I was like, oh, I just
That's a
bought like
bargain.
bread.
I won't tell you what I spend on my groceries. My house of 4 right now. Oh my God.
Oh,
Like,
I don't even.
I won't even tell you. It's
Take an equity
ridiculous.
loan for that stuff, and
Yeah.
and you've got you've got young men, don't you? Like
Uh-huh.
that.
Uh-huh. Yeah. Yeah. Uh-huh.
David says that sad to say that the numbers are skewed by who is currently in power.
Yep.
Amen,
Yeah.
brother.
The numbers are, yep.
Amen.
And
And then he also says, what else is he says, oh, he did a VA about 9 months ago. It took about 5 months to
months?
close.
Oh my God.
Oh,
David, that was an assumable loan. It took 5 months.
jeez.
Get the heck out
Well,
of
so
here.
here's the other thing that I have, that I can see the problem with the assumable loans is that you have these, the people that have the equity. I mean, we have some of these Gen Xers that have had, equity. I've got a good amount of equity, but
Yep.
not as much as the boomers, right?
Right.
And the boomers are cashing in and
Mhm.
they're using all of their equity to buy another property. They're not cashing out to go on vacations or travel the world, or maybe some of them are, but not many. So like if you have a $500,000 house and you have, $250,000, say you need that money, you need to release that loan so that you can use that money and maybe get another mortgage on another property.
Yeah.
Like if you owe $250,000 to ABC Bank and you go to buy another property and say you do, like you're not getting the money right away. You're getting it in dribs and drabs. I don't know. I just don't. I don't know. And, in terms of like the creative financing and things like that, like you
Yep.
just, I don't know. I guess, It's out of my wheelhouse because I got into the market. I got my real estate license way after all of that ended.
Yeah.
I've done very, very, very little in creative financing. It just
That's
seems
so not my thing. That's so, yeah.
no, it
That's
seems
why
like
I
it's
go to the
just so
professional
risky.
lenders. The lenders know all that.
So
So,
risky. So
yeah.
risky, right?
Yep.
Because there's no like you have a bank, it's at least it's regulated.
Great.
So
Regulated. But so what does David say? David said banks
let me see what we got going on here. He says yes, banks are in no hurry. The problem with assumable loans, the buyer needs to have cash to cover the difference between the loan amount and the purchase price, which is what we were just talking about.
Right.
Yep. Which is exactly what we're
Wow.
talking about. Because there's this lack of creative financing that they had back in the 1980s that Congress said,
Mm-hmm.
eh.
Yep.
So I actually have
Interesting.
oh, I had a sound effect for that.
Yeah.
Wait a minute. Let's see if it'll work.
You missed the opportunity.
Oh, can you hear it?
Yes.
That was
awesome. Good job, Jen.
Hey now.
I love it. I love it. You're getting all techie here. Sorry, I'm holding the dog because he's about to bark because my daughter's about to walk in the door. So I'm just trying to keep him from barking.
Hey, this is you know what? This is how we roll. This is what makes it fun. That we already did that one. He says, in the one I did, the buyer needed $131,000 cash.
Wow.
Well, this is what I'm talking about. This is exactly what I'm talking about. So in a case like that, it's like, so now the buyer has to, in today's world, unless it just happens to work out that the amount of the mortgage on the property you're buying is the exact same amount of money.
Mm-hmm.
So you're going to need 2 loans. You're going to need 2 mortgages.
Yeah.
And what happens if they can't get approved for 2 mortgages? Now that becomes more risky for the seller because from a seller's perspective, yes, if somebody assumes your mortgage, you are released from that mortgage.
Mm-hmm.
And now you can move on and buy something else and the sale goes on and everything else.
Yep.
But during the transaction process, not only does that buyer you have to wait, it's a elevated risk because the buyer not only has to be approved, now they've got to be, okay, what's their supplemental financing?
Mm-hmm.
And you could go, like in David's case, it can go 5 months and the deal dies. And then what happens if that seller is trying to buy something else?
Exactly. Or say the market shifts and then they're then the house isn't worth what it was 5 months prior. I mean, we know that can happen.
Yeah. Which, I mean,
stop.
I know we're talking like it's unlikely and all the things and all the stuff, but who knows? Who knows?
Who knows?
Things could happen. I mean,
right.
Actually, I have an article for that too.
Do you?
I got all.
Do share. Don't hold out on us. Like, come on.
I got all the things. Hold on.
You got the articles. You got sound
effects. Cool your jets there, Jackie. Cool your jets. Be patient. Go. You must be a barrel of fun on Christmas. Is it Christmas yet? Is it Christmas yet? Is it Christmas yet? I can see your mother now, Jackie. Now it's 6 weeks to Christmas.
I know.
You have to be patient.
I know. I know.
This article came out yesterday.
Yep.
And it's a Fortune article. The outlook. Yeah, look at Jerome Powell. He's like, it's not my fault.
Yeah, J Powell.
It's not my fault. Don't blame me.
Yeah, bull. Moron. Sorry. Did I just say that out loud? Sorry.
You can say that. I shouldn't say he's a bull. That's not professional. I can just say he's not the most favorite man.
No, he's not.
A tough job. Trying to be nice, I guess, but I don't know.
Don't be nice.
Hey, you know what? If you're head of an asylum, you're not responsible. Like you can't control all the inmates. Like, I don't know.
You're right.
You know what I'm saying?
Yeah. Anyways. I hear you.
I don't know if that's a good analogy or not, but it says the outlook for home prices has changed drastically in just the past month as Fed rate cuts look more and more distant. Just like all the cash pros are going. See, I told you. They
are. Yeah, right. See, now they're gonna ride this till. Oh,
of course
God.
they are. But it says that the forecast for U.S. homes suddenly to look a lot different compared to just a month ago, according to Freddie Mac's latest outlook. I'm not surprised about this because the
Mhm.
market doesn't make sense right now. The
No.
market does not make sense. You have rates that are going through the roof.
Mhm.
Not going through the roof, but they're between rates and high values, the affordability, people are pulling back like crazy, pulling back like crazy. It doesn't make sense that values keep going up. It doesn't make any sense, but they still do. And so this makes sense. Prices will increase by only 0.5%, but we notice that doesn't mean drop. It means it's not, instead of going, they said when they predicted home prices would rise 2.5%. And then in 2024,
And then
2.1
2.1.
in 2025. Now they're saying 0.5. Of course, I'm going to put a big asterisk. Depends on where you live.
Yep.
It depends on where you
It
live. I'm
depends
in
on
the
where you are.
Northeast. You're in the Northeast. I looked at a map earlier today, and the Northeast, like we always do better than the country. Like we always, like right
Oh, yeah.
now, we will do our price appreciation here in Massachusetts, probably in the Garden State, like all the, in Jersey and New York, it's gonna be more than 5%.
Totally.
But those folks down in Florida,
Oh,
they're
Florida.
they're my heart's going out to them.
Yeah, Florida's taking a hit. I
They're
think,
taking a big hit.
Arizona, California, obviously, Austin, Texas. Austin's starting well, I think all of Texas is taking a hit now,
They're
honestly.
they're they're struggling.
They
They're
are.
struggling.
Yep, but
Um,
not here.
nope. It says while housing demand is solid due to a large share of millennial first-time home buyers looking to buy homes, they are challenged by high mortgage rates and a lack of homes available for sale, according to Freddie Mac. He says we expect these challenges to persist in 2024, mainly in the absence of significant rate cuts, which will keep the rate lock effect in place and keep total home sale volume below 5 million in 2024.
Wow. Below 5 million.
So settle in, folks.
Yep.
That's
Yep.
the that's the
This
that's
is
the
how it's
message
gonna be.
there.
This is how it's gonna be the rest of the
Settle in.
year.
I mean, you did a live stream. Didn't you do a live stream last week? That
Mhm.
was like, this is the new normal or something?
Exactly, yep, the housing market will never be the same, and it's because of these higher rates. Um, I'm actually dropping another video tomorrow about why you'll regret buying a house this year, because not only we get the high interest rates, the prices are still going up. Like you said, it doesn't seem right that the prices are going up, but the problem is the inventory, right? I've said this a million times before. We're seeing home prices here in Jersey, North Jersey, are six figures plus over asking price, and it's not getting better. It's not, and it's like this market is rate agnostic. It doesn't matter what the rates are. People are just throwing any dollar amount and waiving appraisals and waiving inspections.
Wow. So we're
It's
not seeing
bad.
that here. We're not seeing as much here. And of course, I should say here meaning South Shore, south of Boston. You
Right.
go up to the city, I'm sure it's entirely
I'm sure
different.
in Boston. Oh yeah, Boston's I think is pretty
It's
it's
probably
pretty similar.
yeah.
It's similar to what's going on here. But um where was I going with this? But anyway, like yeah, so talking about how this is the new normal. It is going to be this is the new normal for now. But here's
Yep.
my question, Jen. Here's what I keep going to. We're in an election year.
Yes.
So
Yes.
I think
So
it's going to be worse. By
I
this is my prediction. By the fall,
you think so?
I think. Well, listen.
Because the thing is like it's a known fact that when it's an election year, like if the economy is, the housing market sucks
Mhm.
and people are, and things are not going well and the interest rates keep going up and everything else,
Yeah.
they're gonna partially blame the current administration. So it
Yes.
behooves the current they always try to puff up. Now, that could be from puffed up reports.
Right. I
They
mean,
could,
they
alter the
can
reports
manipulate
even
it.
though they're
Yeah.
not maybe 100% accurate. Imagine that. The
I
government doesn't report 100% accurate
oh my god.
information.
Like
Can you?
really? They
I can't
do?
even
I
fathom it.
can't
Gee,
even I
I
can't.
just would break my heart that they would lie to us.
I
They wouldn't,
know. What the
they
heck?
wouldn't do that to us, would they?
No,
They
they would
wouldn't do
never.
that. They
But,
wouldn't. They're always, you know what, politicians like, no, they are there to represent us and tell us the truth and take
yeah.
care of and be transparent.
Yeah, get the hell out of here, sorry.
Says nobody ever.
But
So,
listen, but here's the thing. This is what I keep like I really think about this on the daily. As we're coming into summer, right? We're not that far
yep,
from summer. Summer's usually slow anyway, right? And now we're going to go into fall. Once like October comes, then we're going into the holiday, right? The holiday season, and it's typically slow then too. But coming into the election, I'm thinking to myself, if they decide, hey, let's lower the interest rates, kind of let's get people back into the housing market. What is that? It depends on how low the interest rates go, right? So if they
yes,
don't bring it low enough to stimulate the sellers to say, hey, let's sell our homes, so say if they only bring it back down to the sixes, and then you got millions of people jumping back into the market, where are the home prices going, right? So I don't think I could be wrong. I don't think they're going to risk that because people are complaining how expensive homes are. Do you think they're going to like make themselves look worse by saying, we'll
no.
drop the rates come to 6, and then now forget it. Now homes are going to go even like another $100,000 more. I don't know.
So,
The things I
okay,
think
so
about.
I agree with you. I agree with you, and trying to stay on like the solution side of things.
Right.
Going back to that article about what got those folks out of the 1980s, in their predicament,
Yeah.
what got them out was assumable loans and creative financing.
Right.
Well, fast forward to now, one of the things that triggered one of the major causes of the financial crisis of '08 was unscrupulous lending practices.
Yes.
So that is something to watch out for. Like I actually I have a video dropping on Wednesday about the coming. There's a lot of talk about foreclosures and wave of foreclosures, and I kind of want to just talk about that. Like, what would that happen? Like, I don't think there's a wave of foreclosures, but there is an uptick in foreclosures.
Mhm.
I think largely because of moratoriums being lifted, and that's causing a few more to come on. And the inflation is crazy. So some people are in mortgages that they probably should never have gotten into in the first place, and they're
Right.
gonna, or they lost their job and they can't find employment because hello, the employment isn't as good as everyone thinks it is, right?
Right.
So
Yep.
but is it a wave? I don't think so. But I do talk about like what the warning signs are, and one of the warning signs is going to be changes in lender policy. And if we start seeing all like
Mm.
in terms of these creative finances, they say, okay, we're going to bring back assumable mortgages, and then to make up that gap, we're going to roll out these programs, and we're going to start waiving appraisals, or we're going to do this, and we're going to make it a little easier. We're going to lower the FICO scores. We're going to lower this and all. If we start doing that, someone somewhere, investors, businessmen, will figure out a way. If it's not monitored, if it's not closely scrutinized, there's going to be some shady stuff going on, and it's going to
Yep.
put us even in a bigger pickle. And a lot of people are going to get into stuff that they shouldn't. I mean, just because a property is assumable, maybe they can assume that at the lower rate, but maybe they really shouldn't be buying. There's always going to be
Exactly.
people that buy that shouldn't be buying.
Yep.
Or more importantly, not necessarily buy or no buy, but buy at that price.
Right.
Like, there are people that are in financial jeopardy
Mhm.
because they're in homes that are too big for them.
Yeah.
They're in homes that are. I talked to somebody the other day, and it's like, oh, their friends are selling their house because they want to keep up with the Joneses, and they
Mhm.
want to buy the 3,500 square foot house. I said, oh my God, well, like, what are they in now? Oh, it's only like 2,100 square feet. Oh, how many kids they got? Like 15?
You
Like,
really.
that's I
Mhm.
but, I mean, I'm thinking like, what it's a matter of like, what do you need versus what do you want? And 2,100 square feet it's a sizable house.
Yeah.
And it's like, okay, so if that's in your finances, now 3,500 they're stretching. And now if they go under foreclosure with a 3,500 square foot home, that's on them.
Right.
That's on them. That's not the market crashing, whatever. It's like, no, they shouldn't be
They
allowed
made that
to
happen.
buy that 3,500 square foot home.
Exactly. Exactly. So,
And
yeah, you
you
have
know
a
what I
good
mean?
point there. You have a really good point there about,
Thank
doing
you,
the creative
Jackie.
financing. Well, I always said you're so smart, 'cause you are.
You know what? I wish you would tell the world. Tell my kids.
We're always
Really.
saying we're saving
Maybe
the
I
world here,
maybe I
no.
should run for Congress.
Yeah, there you go.
You really
There you
shake some, I gotta okay, what I got something. I got something for you here. I c
show me.
I could really shake some up. Told you.
Look at you. Look at you getting all techie with your sound effects, man. Oh,
Just trying to make it interesting.
you're awesome.
Hey, if somebody's watching this live stream, I very much appreciate it, but I'm trying to reward you with some entertainment. Um, so can we get onto some questions? Can we pull up some questions
Yes.
here?
Yes, yes, yes. Bring your
So,
questions on. I wanna see.
yeah, yeah. So thank you very much for those that I have two different questions that I wanted to post on the comments that came up, and they came up and I says, you know what, this sounds like a good conversation for Jackie and I. So this
Yeah.
is, if I can read it, Ninny Broth.
Nitty
I'm
bra.
reading that correct. Nitty Bra says, hello from Worcester, Jen. That's in my state, Massachusetts. Hello,
Nice.
hello. They say, staying put in my house with my 2.4% interest rate. Good on you. Been binging your vids. Would you consider doing a video on whether or not adding a second floor to a one-story house is a good investment? My neighborhood is mostly small houses on small city lots. Not much room to build outward. Some have been building up, and I'm thinking I'm doing the same. I'm in a 1,000 square foot 1920s bungalow. I have a lot of equity because I bought my house abandoned in foreclosure in 2010.
Oh,
It's worth 3 to 4 times that now, even
wow.
unrenovated.
Good for them. Good
Good
for
for
them.
them
That was
indeed.
a good
So
it's
I
good
I
buy.
wanted to bring this up because I actually talked about this in a video that I think what we're going to see a lot of is those that don't want to leave their low interest rate, that
Mhm.
can't find another house to buy at the payment that they can afford or want to pay, and have the ability to move, to build up or out, are going to consider doing that.
Yeah.
You
I
know,
would. I would
um,
I totally would do that if I was this person right here and I was in that house.
well,
Head
maybe.
on.
So here's what I want. What my advice would be is the big asterisk is the cost.
Yes.
So, I mean, this person's in Massachusetts. We're the third most expensive state in the country.
Mhm.
Um, Builder costs are going to be substantial, depending on what they're looking to do, right? If the reason they want to move is because they want, you know, maybe their bedroom's on the first floor and they want a master suite, or they want another room for a home office, or
Mhm.
a family room, or something of that nature. Um, that might be worthwhile.
Yep.
But if you're talking about putting a second story, which probably 1920s bungalow, if you're probably looking at a cinder block foundation, most likely, maybe even a fieldstone foundation.
Yeah.
Those, and check with your building codes to see if that is structurally you're able to build a second floor. A lot of those you won't unless you shore it up and actually, you know, um, shore up the existing foundation to make it structurally sound. You have to deal with a structural engineer, of course, and find out what would need to be done. But some kind of you'd have to address that before, in order to do it.
Yep.
But that cost, I mean, my parents just renovated their bathroom, and it's a full bath, modest. It was a modest renovation. They had tub, house was built in 1971 or something, 72. And they had, full gut. So tub,
Mhm.
flooring, vanity, drywall, everything gutted, right? And they just went with a tile bathtub, a new tub, tile surround, vanity, flush, nothing fancy. 25 grand. 25
Oh
grand.
my
That's what it costs
word.
for that. Now,
Holy cow.
I when my husband at the time and I bought the house that I'm in now back in 24 years ago, we renovated on our own our upstairs bath. And we did flooring, vanity, flush, patch and everything else. I think we spent $1,500. It would probably cost $5,000 now. So that's what you have to look at.
You're right. Well, listen, just a mere 5 years ago, we renovated our bathroom here, our kids' bathroom. We ended up doing a double sink. Like that was like the biggest change we made to it. I mean, like full gut, tiled the shower, the floor. Yep. We didn't go like super expensive, but that cost us $16,000. That was 5 years ago. So to be this went, oh my God, almost 10,000 more. But now,
so I think from a practical answer, and for this question, for was it ninny broth, I think, or for anybody watching, the thing that I would recommend, and curious to hear what you have to say, Jackie, but what I would recommend is do the homework. You do the legwork. You got to talk to a couple of builders. Find out from a couple contractors and decide first what exactly is it that you need, that you, instead of selling, that your house would need to replace within to be realistic, right?
Yep.
That you need to replicate in your current house. Find out how much it costs, and then once you have that cost established, add it on to your current house and see what a comparable home would cost you to buy. Now, I will tell you, if it's going to cost you $100,000 to do that, right? And you can get a house that's comparable for $100,000 more. I'm going to say save yourself a headache, unless you're tied to your house, right? There's things that are irreplaceable about that house and neighborhood or whatever,
right?
But then you have to question, like, is it worth going through all the trouble? Because renovations are not fun, no matter what it is,
right? No,
right?
They're not.
Like, it's a headache because there's the process, and it takes forever, and it's the availability of materials, and all of a sudden the materials go up, and then there's unforeseen things. So if you get a quote for $100,000 or say $50,000, you get a quote for $50,000, you're going to want to budget $75,000.
Exactly. I was just going to say that.
Period.
Back on more, because
Period.
you're never going to stay in that number. It's never going to happen.
So I think it's worthwhile, though. I mean, especially if it looks like, they bought it at abandoned foreclosure, and it sounds like they've got a ton of equity, a lot of potential. Like, and if you do, the other thing I would say is talk to a local agent, which I can connect you with somebody if you need. If you don't have someone that you know and trust, if you do, go for it. If you don't, fill out the form down in the description, and I'll get in touch with you and get you connected with somebody that is going to give you a straight answer, give you some information. Because what I would want to do is have you talk to that agent to find out how much equity that thing that you want to do is going to add to your house.
Yep.
And find out, be like, okay, well, that thing that you want to do, that you want to spend $50,000 on, is only going to add maybe $10,000 in equity. And if you're like, well, I'm going to be there for 10 years, go for it. But
right. That's the key thing, Jen. If somebody's going to make a renovation, because I get a lot of times like, oh, maybe I should renovate my kitchen before I put it on the market. No, do your renovations based on, like, you want to enjoy it. You're going to live with it, and you're going to live with it for a while. You can't just turn around and say, oh, I just spent $30,000 on a bathroom. Now my house is worth $30,000 more. I'm glad you brought that up, because that's a big misconception people have. Like, oh, I can charge ask for $30,000 more. No, you cannot. Nope. Another thing I want to stress, when you're making renovations, when you're talking to a real estate agent, and, have them show you comps, and you can see what other people have done, those in their updated homes, but do not do anything custom, because I've seen this a lot where I've listed homes where people did like a super expensive custom cabinets and like the ornate woods and all this other stuff. Nobody cares. Like,
I did a video on that. I did. I just dropped a video last week about that exact same thing. Don't because
do that.
It was there was a place that I have a client that's looking to relocate, buy us a home here, like a 6 month out of the year home. They're in California, and he emailed me. He's like, "What about this property? It looks like a really good, nice townhome in a really nice community, and they sell pretty quickly." And they're
Yep.
like, "Why isn't this one sold?" And so I knew as soon as I went online and saw the pictures,
Yeah.
they had ripped out. And I mean, those places are only like 10 years old. Like they're relatively new. Well,
Mhm.
new in our terms, anyways. And they ripped out all the cabinets in the kitchen, and they put these like subway tiles from floor to ceiling, subway tiles with these white shelves. And I mean, it aesthetically looks gorgeous with these plates, hand-picked plates that were multicolored. It looked like something in an art studio,
Mhm.
but it was so unfunctional.
Mhm.
It was so personal
Yes.
because because it was so, it was so specific.
Yep.
And that condo will sell. They end up taking it off the market. And because it will, not only is it they're gonna have trouble selling it, but it will likely sell for less than market value
Absolutely. Yeah.
because it was renovated specifically for that
Yes.
home. So that
Yep.
was, I mean, and you know what? If you do it and you're like, "You know what? I don't care. I don't care. I want the enjoyment today."
Yeah.
And
And that's fine.
then by all means, I'm not saying that they shouldn't have done it, but I'm saying what could happen if you make
Ex
those decisions.
Absolutely. I mean, look, if that's what you want and you wanna live in that, like you said, that's fine, but, um, just be aware of that, and
Yep.
don't expect you're gonna get all this extra money out of it because you have this special kitchen. Like, here's a story. I had to actually go do, like, a broker price opinion for, somebody was gonna go into foreclosures a few years ago. They spent I couldn't believe this kitchen. Not my taste at all. It was like that Tuscany, like not to say Tuscan, like yeah, it was very like old, I would say old world Italian style, like ornate
Okay, yeah. Yep.
cabinets, like
Yep.
mahogany. They were so proud of this kitchen. It cost them $300,000 to renovate this kitchen. Now, mind you, it was a big house. It's $1 million house, obviously, but 300 does it $300,000 they put into this kitchen, and they thought it was the best thing, and I'm looking at this, and I'm like, "People are gonna hate this."
So that's the thing is
Oh my
if you're in a
god.
neighborhood,
Yeah.
if you're in Tony Soprano's neighborhood,
Yeah. Uh-huh.
you go, you do it. You do you
Exactly.
because everybody is buying that type of house.
Yeah.
But you stick that kitchen in the wrong and it's not
Yeah.
conforming to what is the norm in your neighborhood,
Yeah. Yep.
you might as well just, I mean, and hey, if you've got the cash, well, if you've got the cash to blow,
Yeah.
um, message me and I'll give you my address because I could use some money. Just saying.
Well,
See, throwing money out the window, I'll be there to grab it.
yeah,
You
and
know,
I'll
I
be
got a
right
kid,
behind Jen. I'll
I
pick
got
up the scrap,
I got a
whatever she
second
did was
kid
bad.
going
Yeah.
into college. You know the pain. You know the
Oh, I know.
pain.
Yeah, I got
Oy
one going.
vey.
Got
And
one
and
leaving.
and
Yep.
don't
Yeah.
get me don't even get me started on how much college costs. That's a big
Yeah, that's a whole other
that's a whole, like, farce. Like,
I know
it's
it is.
all nonsense and
It's a
rid
scam. It's a
it's a s
scam.
it's I don't know if I call it a scam, but I would say that it is.
It makes me feel better to say that because
It
it's so
makes me
damn
feel
expensive.
gross, and
Yeah.
it's kinda ridiculous on how much college costs, but
It is,
anyways,
it's outrageous. But
um,
anyway, so don't do custom renovations to this unit $300,000 because you're not gonna get that back. Anyway, so there you go.
you want another one? Let's do another one.
Yeah, let's do another one. What do we
And
got?
those that are tuning in, if you have any questions, or any comments, feel free to just, drop them in the chat, you
Yeah.
know? Join the conversation. We'd
Yes.
love to chat with you. Alright, so the second one is personal beauty lab. Um, and this person says, "I've been wanting to upgrade." Oh, yes, I remember this question. "I've been wanting to upgrade to a single family from a condo and already have down payment, money, etc. My problem is the DTI won't allow me to carry the second mortgage payment above a certain amount, and I'm not finding homes I like in that range. I haven't sold my current place because inventory is super low and I have nowhere to go. any tips or prior videos covering my situation? I feel like I should start like a Dear Abby thing,
I think
or
you should.
like isn't that like Dear, like what was
Yeah.
that other what was the name
Yeah,
of that
Dear
woman?
Abby.
Not Dear, was it Dear Abby, or what was
Yeah,
the one
Dear.
that the love doctor there? What was her name?
Oh,
Um um oh,
oh my God.
it'll come to me. You know what I'm talking about.
Dr.
And she,
Ruth. Dr.
Dr.
Doc
Ruth,
Dr. Ruth.
didn't she have like an accent?
Yeah, she did. She was
Dr.
German.
Ruth, and I'm
Dr.
going to
Ruth.
tell you, I don't care. I sound like Count Dracula or something. I don't know. I can't do it. But anyway, I digress. I digress.
God. Oh, Jen.
Let me tell you about your situation, about your home that you cannot sell. So the situation, and this is a tough situation, because I think what they're trying to do here is, take, which is a common strategy when someone has a lot of equity in their property, and
Yep.
you want to try to find a place before you sell the primary place. And you
Yep.
can chime in, Jack, if you think I'm reading this wrong, but like if you're say you want to buy house number 2,
Yep.
and it's a tough market, and you don't want to be pressured into making a decision on house number 2 by selling house number 1 too fast. And
Right.
house number 1 has a low mortgage and lots of equity. So
Yes.
what a lot of people will do is they'll take the equity out, a good chunk. You can't take it all out.
Right.
Up to like 80-85%. But they take a chunk out of that equity, use it as a down payment on house number 2.
Yes.
And then after you close on house number 2, you sell house number 1. And some
Correct.
people take, and I did a video on this, about a month ago, where you could, do that and then take house number 1, and you could either sell it
Yep.
or turn it into a rental and
Yes.
have positive cash flow. So my first thought is that if your intention is to take that rental and turn it into, or take that first property, turn it into a rental, the rules on using rental income for that property have changed. You don't have to have, on a lot of lenders, don't require that you don't have to have a renter physically in there to bring rental income. You need to have like documentation saying that it's a reasonable rent that you're collecting. You have to have a signed lease saying that this person's going to move in. But if
Right.
you can show that, now that income covers that debt.
Yes.
So you have your mortgage is $1,500 a month. Your rent that you're going to be collecting after you move out is $1,500 a month. That nullifies that debt. Now you're going into making that offer on that second property with no debt,
Right.
no existing debt. That helps elevate your
Yes.
debt to income ratio. If that's not an option, then the other option would be, depending on, where they're located. I don't know where, what part of the country they're in terms of what their market looks like. But I know that areas that are not in where we are, Jackie, in the north, up in the Northeast, where it is still very competitive and it is tough to do this, but you might be in an area where you can make an offer with a home sale contingency.
Exactly.
And you go into buyer house number 2, and and I think she's on. Oh, hold on.
Yes.
Oh, cool. Thank you so much for joining us. She says, that was my question, but I don't need the equity to buy house 2. Not wanting to rent either. Chicago is way too tenant.
Oh,
Yeah.
yeah.
No.
I get that. I totally get that. So you don't need the equity to buy the house,
You
to
don't
buy a
need the
house
equity
too,
to
not
buy it.
wanting to be rental either. Okay, so here, can I throw out something?
Go for it. Yes,
So I see what
please.
you're saying. No sellers want sales contingencies. No buyers want rent back. Okay, this is what
Oh,
we've
she's
done.
gonna. Oh, yeah. Oh, yeah.
Yeah,
There we
you
go.
see
Yep.
that? Yeah. Sorry. I read the comment before you put up there. Got
It's
ahead
all
of
good. I'll let it
myself.
go this time.
Anyway,
The
so
comment police will let it go this time.
here's another thing. Now I don't know how this works out in Chicago, but what we've done here in Jersey too is so we'll put a house on the market, and then we will have a contingency that to put out to the buyers that are interested in buying a home, that the sale is contingent on the home seller finding another place to live. All right, finding another home to buy. So that does buy them some time. And I know, here in our market, buyers will do whatever the heck you want. So it's like take all the time. Like if they want to put an offer on, and if you need a couple of months to find a house, but now there's a risk because now if the seller does not find another house to buy, they can back out of the deal. But in this scenario, what she's describing, I think that might be her best bet to like put the place on the market. And with that contingency there to the buyer, that the sale is contingent on the seller finding another home to buy.
What does you think she meant by no sellers? No sellers. Does she mean you think she meant
So
sellers want or no sellers want sales?
no sellers want sales contingency. What she's saying is if she puts an offer on a house but her house isn't sold yet, they don't want to deal with that, which that's what we're having here too. And I'm sure you're having that up by you too. Like
so you could do a reverse contingency.
That's what I'm saying. Reverse.
Oh, okay.
I'm
sorry.
That's what I'm saying here. So she can
put my ADHD on the market.
You're fine. She puts her house on the market with the contingency to the buyer that
subject to buying,
subject to the seller buying their next home. And then you put some type of time frame in there of how long it's going to be. And I bet you won't have an issue with that because buyers, if there's such a shortage of homes where you are, like what we're having here, buyers will give you whatever the hell you want.
Yeah, I don't know what it's like in Chicago right now.
So I don't know how the market is in Chicago, but that is a possibility. I highly recommend just speaking to a real estate agent and see what are sellers doing out there. Is that something? Are they doing like reverse contingency like that? Or another thing. Oh, you're welcome. So another thing you can think about if you need money to put down on the next place. Nobody loves doing this, but you can also borrow against your 401k. Okay. Pull that money
even
out.
if it's for a home, if it's a home purchase, you can.
Exactly. You can use
it to allow you to do it without penalty.
Exactly. And then once you
can always pay it
back. You pay yourself right back. Yeah. So
as a temporary, but I would start there. I would absolutely start with and the thing is like you can put it list the property with that contingency. The thing about listing your home with that subject to the seller buying. Or either buying another home if you have one on the radar, or subject to seller finding suitable housing, it's kind of your get out of jail free card. Because if for some reason, you don't find the buyer that's willing to play ball with you, you're not homeless. If the buyer, you get an offer and it's a great offer, except the buyer's like, well, no, I really need X amount of time and I'm not willing to extend. You're not. Oh well. So okay, then I'm not going to do it. And you still have the upper hand in that regard. I would just make sure that you have, when you're negotiating with that buyer, and this is why it's so critical, find an agent that has done this before.
Yes.
And again, like I mentioned it earlier on the other comment, is if you don't have somebody that you trust that's seasoned, an agent that you've worked with before, or that has been around for a while, click there's going to be send me a message, the link down in the description, and I'll connect you with somebody that knows what they're doing out there. Because what you're going to want to do is make sure that your offer has the ability for you to extend. So like if the buyer says, oh, I'll give you 2 weeks, and you're like, okay, well, there's more inventory coming on. Well, what happens if you make an offer on a property and it doesn't go through? And you're like, but I want to keep looking. So you can go back to that, your buyer, and say, hey, I need another 2 weeks or another week. You want to see if you can get a buyer gives you some wiggle room. And then when you make your offer, now you can go to that seller and be like, hey, I got my house under contract. We've done the inspections, blah, 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 blah. Here's all the credentials. That would be up to your agent to sell it to the seller, like your agent representing you, to really like go to bat for you and make sure that listing agent understands and sees that you're a good you're a good seller. She's got a follow-up comment here. Let's see. She says Chicago is like lowest inventory across the nation. Oof. We are always on Redfin's lowest inventories. I have a pension. Can't borrow against it.
Yeah, the reverse contingency, I think, is going to be your best bet. But definitely talk to an agent, like Jen just said. Get with a seasoned agent who's done this and like who know. Like 2 years ago, this is a thing. We did, I mean, it's a thing now, but like that year, I had so many sales that happened. Like, I can't tell you how many times I did that where somebody had to sell, but they, it's same exact situation. So that's
Yep.
what we did. That's what we
Yeah,
did.
absolutely.
We put that contingency. It worked beautifully. And here's my thought for
You're
the day.
very, very, very
It's,
welcome, Personal
it's
Beauty Lab.
it's all, oh, you're so welcome. Here's my
Yeah.
thing. It's all
Yes.
about the timing. Okay. It
Yes.
was, I don't know, Jen, if you've had this in the years you've been doing real estate, I always feel like that right house comes along at the right moment.
Oh
When
my God.
when I've worked with people who are like, we got to get out of here. Like their house is on the market. They got to be out in like 45 days. Oh my God,
I
we
can't
gotta find a
count.
house. It's
I
somehow
cannot
boom, it
count how
happens,
many times, and
right?
it's like, it sounds all like, oh, kumbaya, let's
Yeah,
sit around in
it
like,
does,
a prayer circle or something, and
right?
it's the real estate gods are gonna rain down on us. It's like, no,
No, but
it's not that
it's
way.
so
But
true. It's so
it
true.
is a lot of work, and that's the last point I wanted to make on that.
Yep,
Um, is that and why it's so critical that you get with the right agent, because
absolutely.
these
Yep,
things are possible, but they're not easy. They're not
no,
easy. It's going to require a lot of patience. It's going to
yep,
require a lot of creativity, a lot of explaining, a lot of research. It absolutely can happen. I've seen it happen. I've had
yep,
some seriously challenging, not from difficult people, but challenging just because there's a lot of moving parts
yeah.
in the process, and it can be done. But a lot of,
Mhm.
in my experience, Jackie, a lot of agents, they want the quick in and out. They want, like, let's put it on the market and we're going to sell it. And
Yeah.
I had one client that called me from my old YouTube channel, and they were like, well, we sold our house and now we have no place to go. And I said,
Ah,
did the agent ask you this question? Well, we didn't really talk about it. They were very excited about getting the deal done, and, they were so excited about getting me a good price. There you go. In and out. And now that agent, just like, they got their check and off they go. And off they go. It's like, sometimes an agent's job is to say that, this is more complicated. Do you really want to do this? Maybe it's not the right time to do this. I spend more time planning than actually doing
yeah.
the thing with putting it on the market, and strategizing and making sure that all the ducks in a row. So it's so critical. So
That is
critical that you work
that
with
is
somebody.
my
You know what I mean?
the first question I ask, especially in this market, when somebody's I'm meeting with a home seller, where are you going?
Yes.
Where are you go
Which, it
where
sounds
do
so
you
basic.
It's so but that's the first
But
question I
that's the
always ask.
thing
What is
that,
your plan? Where are you going? And
yeah,
if they don't have it, I'll try to come up with the well, like, let's devise a plan. And if we can't come up with that plan, then I will tell them, like you just said, this may not be the right time. But
yep.
that's what we're hired to do. We're hired
Well, that's what we're supposed to
work.
do.
We're,
But that's not what everybody does.
no,
That's
no,
not a
you're
lot of the
absolutely right.
agents. Like,
You're absolutely right.
you know what I mean? Like,
Yep.
that's why we have people complaining
Yeah,
about
I
our
know.
industry,
I know
is
because
because a lot of
too
agents
many
don't
agents
do
no,
that
they
stuff.
don't do it. They're transactional. It's just like, they're all about the numbers. I gotta get this deal done. I gotta make a commission. I gotta make top agent in my office. I have to make so many sales this year, and that's all they think about. No, you gotta sit down. Like, this is a big freaking deal. People need to move. They gotta find another place to live. It's like, hey, you gotta walk them through it. You can't just walk in like, so where you got? Do you know where you're going? No,
Yeah,
we got a
right.
problem.
It's sometimes it's like sometimes it's I find it like, it's a challenge that, to your point earlier, it's an emotional challenge,
Mhm.
because you have
Yeah.
someone that is heartbroken that they didn't get the house they wanted.
Yep.
And I was gonna say earlier that to your point about, that whole kumbaya thing and all the things, like, the right house. I can't count how many times I truly, it happened to my husband and I when we bought our first place. I was, a young kid. I was a
Mhm.
year in real estate, and I'm like, "Oh, I got my license in, like, 1996." I'm like, "Oh, I should probably, like, buy a house, buy something," because, I was renting a 300 square foot apartment. I'm like,
Yeah.
"Well, selling real estate, I should probably own some." And so, I bought a condo because that's an easy entry property when you're
Yep.
brand new, and a property came on the market that I was, in our price range and all the things, and we didn't get it. And I was heartbroken. I had moved myself in. I had moved
Mhm.
myself into that house. I could see myself, and I'm like, I know where
Yeah.
my friends are gonna park, and I know where we're gonna put everything, and it's gonna be great, and I just can't wait. And then our offer didn't get accepted, and I was devastated. I was like,
Yeah.
I can't believe this. And then fast forward about a month later, this other property came on the market,
Yep.
and to this day, I am so grateful, truly, because the second property that came on was even more affordable and a way better location.
Yeah.
It was tenant occupied. It needed some sweat equity. I'm all about rolling my sleeves up. I am
Mhm.
all about like, I'm not afraid of that. So for us, I was so grateful.
Yep.
Um,
Same.
about, the fact that that first one didn't work out. Lainey Alost, thank you very much. Some very
Aw,
thoughtful advice. Thank you. Awesome. Glad we could help
love it. I love
everyone.
when
Yeah.
I love helping people. So I love doing
You know what? I read an article or it wasn't a book I read or something like that. And it's like you get like helping people gives like a dopamine rush.
that.
Like
Mhm.
like you get the same help, you get the same dopamine feeling from helping someone as receiving help.
See?
Like it's just, but anyways, I digress. But to your point, um, it's the whole thing I would say is just, if you're trying to do things and it doesn't seem like it's either not in the cards now,
Yep.
it's meant to be, just keep trying. But if it
Exactly.
seems like it's possible, but it's going to be hard, be patient and
Yep.
don't give up. Don't give up
Absolutely.
because,
Don't give
you know,
up.
you could go through the process and maybe it doesn't work out. Well, maybe the real estate gods are telling you it's not the right time for you to do that right now,
Right.
but it might. And I've had some situations over the years that there was a couple times I stood back and went, I can't believe we got this to work. I
Oh,
just can't believe all the
me
pieces
too.
fell put
Oh
together and
my.
everything else. And then
Yep.
sometimes you have very simple situations and you're like, how did this not work?
Right.
Like,
Right. Yep. It's so
how did
it's
this
so true. I can't tell you about like those deals, those hairy deals. I've walked away from the closing table. I'm like, I just can't believe we pulled that off. Like, how did that happen? But
nope.
it all works out.
Yep.
It all comes together.
It
It's
all
just
comes as
it
Jackie Baker would say, it all comes together.
it all comes together.
It all comes
Yes.
together.
Yes, it
Well,
does.
this has been fun.
This has been
And
amazing.
and,
As always.
what's that?
As always.
As
I
always.
I
And I
love
so
having
appreciate
conversations. Yeah.
the chat and the conversation, and I'm so happy that, I'm so happy that we were able to help some people.
Yes, me too. This is good
So,
stuff.
do you know what that means? Before I forget, oh my gosh, I cannot forget. Um, s please stand by. Please stand by.
Jen
If
with the
any
sound effects. Oh, thank you, Jen. Thanks
if,
for the plug.
if anyone is, needs some help down Jersey,
Well, thank
what
you.
area are you in down again?
So I cover Bergen County. We
Bergen
are right
County.
outside. We're a suburb of New York City, so we're about 35 miles outside New York City. I also do cover other parts of northern Jersey, but primarily Bergen County.
Okay.
So yeah.
So if someone either is interested in that area or is interested in the areas around Jackie,
Mhm.
um, Jackie, you know all the people down there.
Yes, I
You
do.
have good relationships
I
down
can hook
there.
you up.
So
Yes, I do.
check out her channel because she's got some good stuff.
Well, thank you.
And you
Thank
might
you.
recognize someone on her live stream.
Yeah.
Yeah, you never
Gee, who?
know.
I don't know. So should Jen, but can we do a shameless plug?
Let's. Let's for those that are still kicking around and hanging on
Shame
here at the
shameless
very
plug.
so Jackie and I, this is totally just no gain except for enjoyment. The
Yes.
only reason we were on this adventure, we started a podcast, and the podcast again is just, hey, we're two middle aged ladies, and we just like to have a good time, have laugh, let our hair down. If I had hair, I'd let it down,
Yep.
honestly. But Reddit Real Estate Disasters is
Yes.
our podcast, and you can check it
Check
out
it out.
on all the major podcast channels, Spotify,
Apple.
Apple, podcasts, iHeartRadio, Google's got a
We're also
podcast.
on YouTube. You can find us on YouTube
You
as well.
on YouTube. We have a
On
YouTube
the
channel as well.
YouTube.
On the YouTube.
Yes.
Jackie Baker. And we just kind of like it's not a kid's show. I'm going to tell you right now.
Yep.
It's not a kid's show.
Nope.
The loops, we don't drop the serious words, but a little bit more, a little bit less serious than we are on the live stream here. So if you want some laughs, check it out.
Yes. Yeah, definitely check it out. It's a lot of fun.
It's a lot of fun. It's a lot of fun. A lot of fun.
Yeah, a lot of fun.
So, Jackie, it's that time.
It's that time.
You know what that time is? You know what time it is?
It went by so fast.
You know what time it is?
I love it.
It's time to dance it out.
Let's dance
and
it
say
out.
Goodbye. Thank you, everyone.
Thank you
for watching. Thank you for tuning in and commenting. Thank you for your support on my channel. I so appreciate it. Tune in next week for another live stream. I'll be back with some more interesting real estate articles and happenings. Have a great week.
Bye.
Bye, everybody. Dance it out, Jackie. Because, this is how middle-aged women dance. Have a great week, everyone.
Bye.